Hey everyone, welcome to another video. This video right here, right here, I want to touch on psychology. It's very, very important. And if you don't have this dead set in your mind, trading, everything else below, all the other trading plan content, risk management content, those are going to be a lot harder to follow without the proper mindset in place. Because you got to understand the way that works. Okay, so I pretty much just have some points here that I really want to touch on to help build an understanding of why you need a strong mindset, why you need a strong belief system in your trading plan for it to work. If you keep switching it up, you won't have the results that you're looking for. Because you're taking a random approach, you're going to get random results. Okay, so I'm going to have a bunch of little topics here. I'm going to touch on them. And it's really up to you to replay this video over and over and over again until you get it dead set in your head. I know it might be boring to, I already watched this video once before. I already watched this video twice. But repetition builds habits. I cannot stress that enough. You need to continue to go through actions if you want it to be a habit. How did you learn to walk if you did not repeat it over and over again? How did you learn to run? If Take this for example. You would not be breathing effortlessly right now if your ancestors way back throughout the thousands and thousands, maybe even millions of years, if they did not practice breathing every day. If breathing did not become a habitual thing and an instinctual thing, you would not be breathing. You would have to breathe like dolphins do, where dolphins have to consciously take a breath in and exhale. Dolphins, if they don't remember to breathe, they will die. Right? So understand that habits is something that's going to lead you on to success or lead you to failure. If you have bad habits, those are not going to be the right things. And if you have good habits, get the habit of building money, get the habit of going to the gym, get the habit of doing certain other things. I can't stress that enough. It's really up to you to get the perspective right. And I'm here to just clarify that and help to put the perspective in the right place, because maybe you don't understand what trading really entails. Maybe you think you're going to get rich next week once you finish all the videos. So let's just jump into this. So a reason that really motivated me to make this video right now was changing your habitual feelings is equivalent to getting rid of drug addiction, right? So obviously there's some people that do crack cocaine and all these other things, and we know from like what everybody else says growing up in school, whatever, that these drugs are very, very addictive. Stay away from them at all costs. Stay away from these drugs. Don't even try to experiment. But the same thing goes for emotional habits, right? So whether that is every time I get hit, I feel bad. Why did I get hit? It could also be the case that every time I fall on the floor, I just get mad. Why does gravity exist? Oh my God. And that's just a habit. 20 years down the line, I'm still feeling the same way. So it's up to you to have the perspective, be like, you know what? Gravity exists. And if I don't trip, I won't fall. Right? So you just got to understand that there's a certain perspective that's going to help you succeed. There's just a certain perspective that's going to help you to succeed. If I was falling on the floor for so long and I'm just going to have a bad attitude about it, then I'm not going to get any of the development that I really want. Now, if I understand that gravity exists, if I understand that there are certain things that's going to try to make me fall, but I can have a plan in place where I'm like, hey, you know what? I'll tie my shoelaces. I'll learn how to walk properly or run properly or whatever. And I'll take my chances to not fall on the floor. Same thing goes for some videos down below where I touch on the safety of crossing the street. It's a danger to cross the street all the time, right? But it's up to you to be like, hey, you know what? Look left, look right. The streets are clear. Let me cross now. But obviously, it's not always just as simple as that, because there may be a plane that falls out of the sky and hits you. There may be something completely random that hits you. But it's up to you to analyze the risk of finding out, is this going to work out for me? Okay. So the first thing I'm going to bring up are dice. Okay. When you roll some dice, let's say you roll one die. You know that there's 6 sides on the die. Now, your chances of getting number 1 is 1 out of 6. Your chance of getting number 3 is 1 out of 6. So just work with me with this. I'm going to elaborate this idea into some other things, But understand, every time you roll the dice, you never know what the outcome is going to be. You never know. You know your odds. You know that you have a 1 in 6 chance of getting any of those one numbers. Same thing goes for flipping a coin. Now, when you flip a coin, it's either heads or tails. 50% match, right? Your odds are 50% for betting on one side. Now, you never know which one is going to be heads or tails, but in the long run, you know, you don't have to worry about you not getting the right one every so often, because you know the average is 50%. Okay. Now, this idea of the coin and the dice, understanding that you have a percentage, right? You 1 out of 6, the percentage is like 16% or something like that, if my math is right. Now, I'm transitioning this part into the casino. I don't know if you guys have been to a casino before, but casinos kind of run the same way, okay? They have different machines, different games all around the room, and they divide their risk up. This is a high risk game, this is a low risk game, this is like a slot machine, and the slot machine is triggered towards the house, meaning you might only have a 30% chance of winning, while the casino is going to win 70% of the time, okay? Okay, now, do you think the casino is getting scared that somebody might come in and win some money? No, they don't. They're a business. They understand that people are going to come in and win some money, but in the long run, they will make money. And I touched down on this in the risk management video as well. Understand, like, you can't be fearful of losing some money, and I'm going to touch into explain this a bit more. Have the casino's mindset to understand that you may lose, you may have one complete losing day, you may have one complete losing month and not lose everything, right? It's up to you to stay consistent with your plan. The casino isn't going to be like, oh shit, I lost. The casino isn't going to be like, oh shit, man, we lost money today. Today's a negative day. Let's close down business. No, they keep running because they understand the total risk that they're involved with. They understand that they're making money in the long run as well, right? So both the casino, the dice, and the coin, they're both playing towards odds. 1 to 5, 1 to 6, 3 to 5, whatever the case. They're playing with some odds in their favor, okay? Now, the casino has a certain belief, and as I'm touching on it more and more, I hope you can realize that you can't be fearful of these losses, okay? So the next point is randomness, okay? The markets are random. Now let me clarify. Don't be scared because I say the markets is random or somebody else might have told you the market isn't random. I'm not here to speak on what other people might be saying. This is my perspective. This is how I make my money, okay? So let me just go to the daily time frame here and try to show you something. Try to explain this a little. Okay, so the market is random in a sense, okay? Understand that every moment in the market is very, very unique. Just because some of you guys see a head and shoulders pattern, or some of you guys see, who knows, you guys just see a pattern, okay? Now, this doesn't mean that the pattern won't work out as it did before, but this doesn't mean that it will, okay? Now, let's just say you guys see a head and shoulders pattern. This is a pretty this is a pattern that a lot of traders trade. I personally don't trade this, but a lot of traders do this, okay? Now, what other patterns? Let me just draw some other patterns. Some traders might be trading this, right? Some traders might be trading this. Some traders might be trading, what else is there? Sorry, I'm not really familiar with a lot of patterns because I don't trade these type of patterns. Head and shoulders, we have something called the teacup, something like that. Other patterns are like, the patterns that I would trade are stuff like the higher highs and the lower lows, okay? So when you see a pattern in the market, what do these tell you? These are telling you that something is happening. Human psychology is translating itself into the markets, okay? Now, this tells you that an opportunity is coming, okay? Now, let's say we want to trade this short. Stop loss goes obviously predefined. Understand where your stop loss is going and understand where your target is going. A trader's job is to identify patterns in the market and determine the risk of finding out whether the pattern will play itself out as it has in the past, okay? We're not predicting the future here. We're not, it's 100% it has to go this way. We're not doing any of that mumbo jumbo. We see a pattern, we define the risk, we find our entry, and we have an approximate target. Okay, target is not so much important, but understand that these patterns are all unique. Not because this pattern happened 5 years ago and it resulted in a strong long run, does that mean when it happens today, it's going to result in a strong long run again. Now, this touches into the next point that I'm going to bring up on the buyers and sellers. But I really need to understand that the market is random. The market is said to be random just because you do have thousands, probably millions of traders in the market, all seeing different stuff. The brain, and I touch on this in some of the other videos below, and I will touch it on this as well. The brain sees what it wants to all the time. The brain is going to see what it wants to. So if you're long right now, your brain is going to find supporting reasons on why you should have bought that. If you're short, your brain is going to start to ignore all the long possibilities, right? All the opportunities for price rising and increasing. Your brain's going to ignore that because you're currently short, and your brain's always going to try to prove you right. And this carries with it a bias. We don't need the bias. We just need to trade the plan. So just understand that it's unique, okay? When I see a pattern, let's say you see the lower low structures. This represents downtrend, okay? Now, my perception of this is just that, yeah, the downtrend should continue, right? But this is me playing to my edge. Now, buyers may come in and shoot the price right up, but I'm not going to get mad. I'm not going to get sad about this. This is just me playing my risk. This is just me playing the odds and keeping my edge intact, okay? Okay, now this point and the next point are they go together. So I hope you get the understanding that the market is random. You have a bunch of buyers and sellers in the market doing different things. You have some people that have a lot of money, and you have some people that don't have a lot. Understand that this is what makes the market random. People having different opinions, people having different perspectives, people having different beliefs, and then the people that don't know what they're doing, okay? The market is just being tossed into this whole mixture of different opinions and all that type of stuff. But what we're using to our advantage is what the price is telling us. The price is showing us exactly what these people are doing, and it's showing us how they are feeling, where they're placing their money. So we're going to work with that. Now, the next point just deals with buyers and sellers. So I hope I can explain this in a very, very simple way, because when this was explained to me by industrial traders, like I really found this information to be very, very valuable. So understand this. If you want to buy an iPhone, now let's say an iPhone costs $1,000. For me to want to buy that iPhone for $1,000, first, I must be willing to pay for it, correct? Secondly, there must be someone else willing to sell me an iPhone for $1,000, right? Obviously, someone has to be willing to sell me for $1,000 if I'm willing to pay $1,000 for it. Now, the same goes for the price of iPhones being at $2,000. If people are willing to pay $2,000 for an iPhone, it's because you have people who are willing to sell the iPhone for $2,000, okay? So I'm going to show you on the charts real quick. I'm going to draw it up and try to explain this, okay? Let's say you have 10, you have 11, and you have 12, and you have 9, and you have 8, okay? Now, also, if you go to the book list category, you'll be able to see some of the books where some of the books go through and explain this maybe a lot better than I will. But let me just go and do this. So let's say you go ahead and you buy at 10. You buy at 10, okay? Now, you're only going to make a profit if the price gets to 11, right? That's the only way you're going to make a profit, if the price gets to 11. So if you haven't been introduced to this like prior anywhere else, like I said about the iPhone, there's always a buyer and a seller. For me to buy 100 contracts, someone has to be willing to sell me 100 contracts, okay? So buying at 11, same idea. I bought, let's say, one lot. I bought one lot at $10, right? So someone sold this to me. Forget who it is, it doesn't matter. They're probably some other trader on the other side of the world. But pretty much what this says is that the other trader on the other side of the world thought that this is a high price and the price would fall. There's a very famous quote that goes along the lines of, the market is weird. One man buys, one man sells, and they both think they're smart. So that's the same thing I'm saying here. Okay. So someone sold this to me at $10. I bought one lot and the opposite person thought the price would go down. So the only way I'm going to make money is if I believe that there are other traders that think 12 and 11 are a high price as well. Traders that are going to be willing to sell at these prices. Why do I have to think they're going to sell at this price? Because that's the only way other people are going to try and buy at this price. Okay. So for price to get from 10 to 11, there must be people buying that are increasing the price, and there must be other people selling thinking that that's a high price. For the price to now get to 12, same thing goes. There must be more buyers getting into the market, which increases the price, right? If you have one person buying an iPhone for $1,000, okay, whatever. Now, if you have another 1,000 people trying to buy that same iPhone, the price of the iPhone is going to increase. Supply and demand, okay? Supply and demand. If you want this lighter, I might say it's $1. Now, if 1,000 other people want this lighter, how am I going to find out who really and truly wants this lighter? I'll increase the price of it. It's like an auction. That's the way the market works. It's like an auction. Okay, so sellers have to be at the market. And obviously, the sellers that were in here, the sellers that are here, these guys are in drawdown or they just lost their money, okay? When I make money, I take my money from losing traders. That's how that goes. When you make money, you take it from the other side of the spectrum. So that's another reason why I'm able to read the candlesticks so easily, because I can see as price increase, it tells me nothing but buyers are coming into the market. People are feeling good. People think that this price will increase. And same thing for the opposite side. If price is falling, this tells me that people don't think this is worth buying. People are selling it. People don't want it. And it's garbage, right? If price is 1 tick smaller this time, 3 ticks smaller the next time, 5 ticks smaller the next time, that's just showing me more sellers are coming into the market. Plain, blank, and simple. Okay, now remember this, and this transitions into technical analysis, okay? Okay, now this might not be too relevant, but I thought it was really interesting, and it just goes to show you that like people really believe different things, and you can't really go to do anything about it. So around the year 1970, let's say 1970 to 1975, everybody in North America traded fundamental analysis. This just means they were waiting on interest rates. They were waiting on anything related to the news. Wars going off, CEOs getting sick, CEOs doing bad things, doing good things. Everybody was attentive to this information. Now, also during the early years of the 1970s, there were only a handful of traders who were technical analysis traders. And at this time, technical analysis was viewed as a myth. Technical analysis doesn't work. Technical analysis is some phony stuff, okay? Because everybody at the time was on a different wave. Everybody at the time was trading fundamental analysis. But as time progressed into the 1980s and the 1990s, people realized, whoa, technical analysis actually does something here. Technical analysis can somewhat predict the future, right? So more people hop on board towards technical analysis, right? And then we have the dot-com boom where internet starts booming, and perks for us because now we can trade from our computers and we don't have to be on the trading floors, okay? And even today, you have so many traders who be like, oh my God, I need technical analysis. I don't have a plan. I need this. I need the technicals, right? Take it in that 50 years ago, people weren't using it. People didn't believe in it. And I just go to say that because people will believe in different stuff. Don't get hung up on what everybody else is believing. Trade your plan, have a plan, do that. Only take the trades that you plan and don't plan trades that you don't take. You need to hear that again to understand that. Now, technical analysis is something just like another bias. Okay, so you have a bunch of different analysis. Elliott wave, you could check like the moon and the sun cycles. You can be using moving averages. You can be using Fibonacci's. The list goes on and on. There's probably thousands and thousands of different technical analysis tools that you can use. Now, technical analysis is nothing more than just another perspective on the market. This ties into the randomness of the market, because if you have someone who sees that price should be sold right now and you have someone who says price should be bought right now. What is this like? Who's right? Who's wrong? Neither of them are wrong. As long as they're following your plan, that's what counts the most. Now, referring back to the buyers and sellers and understanding how price moves, like let's go and analyze this real quick. Okay, so we have, let's just make this useful for our example. We have a floor area that turned into a ceiling. Okay, so my trading plan tells me to sell this at this area here. So what do? I look to sell. Now, because I'm not one of the biggest traders in the market, I'm just another retail trader. What I need for the price to move is other people around the world to have the same bias as me. I need the top traders with the most money to come in and also see this is bearish for the price to fall. Simple as that. I need the other traders to have the same idea I do for this price to fall. Okay, now that doesn't mean I need a lot of traders, but I need a lot of their money to be in the same direction for price to fall, right? So if your plan says to buy, like in this case here, and you buy and price falls and hits your stop loss, this just shows you that the buyers didn't come into the market like your trading plan said it would, but that's okay. That's okay. You're just playing your odds. You have an edge in the market. You know you have an edge, right? So this is why I also put technical analysis at the bottom of the spectrum. You need to have your mindset in place for everything else to work. Risk management goes next because without the risk management, you won't have any money to trade. If you lose all your money, you have no money to trade. And that defeats the point of trading. And this just goes to say, anybody that's not trading, your opinion doesn't matter. Why? Because you're not voting. You're not casting a vote out into the market. Your opinion ultimately doesn't mean shit. And remember the example with the coin, the dice, and the casino. It's okay to lose. It's okay. Just follow your plan. Now, the next thing I want to talk about is the fear and the comfortability, okay? Because what really distinguishes the profitable trader and the losing trader is how comfortable they are. How comfortable they are. So many traders are very, very fearful. Even you have a lot of traders who just start out brand new. They have like no knowledge and they make money. This was me. I believe this was my case as well. And it's as I gain more experience with trading and I start to realize, wait a second, I can lose a lot of money here. I've lost a lot of money here. This is really scary. And that starts to weigh on my emotions. I'm like, I don't know if I should take this trade. This one doesn't look good. Maybe my plan doesn't work. Maybe I should add this. No, follow your plan. If you have a plan, follow that and that's it. Because you have an edge in the market. Okay, so there's going to be so many reasons to be fearful in the market. First of all, it's random. So how are you going to know what's happening next? How are you going to know what's happening next? In the video down below, I touch on the 5 psychological fears of trading. But these fears aren't just limited to trading. They also go into life fears. So that's like the fear of the unknown, not knowing what's going to happen next. But here in trading, that's okay. That's okay. The markets are random, but your edge is what's going to allow you to make money, okay? So when you lose a trade, your brain is going to jump into a state of fear, okay? For most people. Now, if you go 2 losing trades in a row, 3 losing trades, you're just going to get scared. And a thing the brain does, and this is why it's so important to understand that each moment in the market is very unique. It's unique. There was never a moment like this one, okay? Is to understand that if I take a losing trade this time, when I'm ready to hop into my next trade, I'm going to be like, okay, shit, what if this one doesn't work out? What if maybe I should skip this one? No, you do not have that type of bias. You take every opportunity for what it is and just that's it. That's it. Nothing, no bias. Don't be like, because the other side of the spectrum as well, if I'm taking 10 winning trades in a row, 20 winning trades in a row, what might be my next thought? Oh, you know what? I'm unstoppable. Let me add more to my next trade. Let me not put a stop loss in. But that is greed. That's going to ruin your account. There's so many reasons to fear. Like let's say this is entry, this is stop loss, and forget the target in this case, but price, you entered the market, price is going all the way down. When price is all the way down here, what are you saying to us? Are you saying it doesn't matter? Just let it take you out if need be. If that's what's going to happen, let it happen. Or are you going to be the person be like, oh shit, you know what? Let me remove my stop loss and just give it some more room? Or are you gonna be the person to be like, oh my god, let me add more in here. Let me enter some more positions, not put a stop loss on this one, and let's just see what happens? Or are you gonna be the person to be like, oh shit, this doesn't work. Let me add the moving averages. Moving average says it's bearish. Let me add a sell. Let me add a sell in here and try to capitalize on this while already having a long in. You see, there's so many reasons for fear. There's so many reasons to be like, let me switch it up. No. There's none of that. Okay? Let your stop loss get hit, and that's it. Another reason to fear here is stop loss gets hit. You're like, oh my god, this is the worst thing ever. Boom. Price goes right into your intended direction. Do not care about this. Do not care. Don't care. Literally. Just trade your plan. It's okay that your stop loss got hit. Because you have that casino's mindset, that firm belief that no matter what, you have an edge in the market. You know that, okay, maybe I'm only winning 40% of my trades, but I'm risking 1 to gain 5 on all of them. So I'm still making a hell of a profit. Okay, it's just, you need to understand that there's a firm belief that you got to have here. You can't have that noob trader belief. You can't have that amateur trader belief where I need to be right on 90% of my trades. I need to be right on 100% of my trades. Let me show you something real quick. For all those people who are so obsessed with having a high win to loss ratio, let me show you this. If I win 90% of the time, okay, right? So let's just say out of 10 trades, I win 9 of them. Okay, win to amount taken. Okay, now let's say for this example as well that for every one that I win, sorry, this is a W. For every one that I win, I make 1 point. Okay, right? 1 pip. Now, for every one that I lose, I'm going to lose, let's say, 100 pips. Do you still want that 90% return when you're making 1 for every win and you're losing 100 for every loss? You don't want that. Forget the win to loss ratio. That's not important. What's important is that you have an edge. Have something to say, you know what? Out of my sample size of 20, I make 10 of my trades, so 50%. Out of the 20 sample size, I make 10 and I'm risking 1 to gain 2 on all my trades. So what? You just made 50% on your money. Okay, so just understand that there's going to be so much reasons to fear. So let me just switch this around here. And let's say you're only making 30% of your trades. You're only winning 30%, right? So you win 3 out of every 10 trades you take. But now let's say you're making 100 pips, right, for every win, and you're losing 10 pips for every loss. Now, is that okay? Is that okay? You have a 30% winning average, but you're making a whole lot of more money than the person that had the 90% average. So listen, guys, you need to have that firm belief. I'm stressing this because a lot of people don't have it. A lot of people might be seeing, you know what, they're losing too much. Trading just isn't working for them. And it all comes down to the right mindset. Theoretically, you can not have a trading plan, and as long as you're low risk enough and you have the right mindset, you will always win your trades. Just take that in. If I had $1 million account and I was trading micro lots and I had no plan whatsoever, I could still make a ton of money off because my mindset is firm. I'm not jumping in and out of trades because of what other people say. I'm not jumping in and out of trades because I get scared or I lost the trade or anything like that, right? So there's a whole lot of reasons to fear. Even you might take a trade and you see I'm in the opposite direction. This doesn't mean anything, okay, guys? Follow your plan because I might be doing something that you have no idea what I'm doing. I might be investing, holding my trades for months to years, and you might be scalping. So who cares on what I'm doing because I'm holding mine way longer than you should be. So literally just have the winner's mentality. Positive mental attitude gets you so far. Now let's just jump to the comfortable perspective on trading, okay? And you've seen me mention a few other things where you can't get happy about your winning trades and you can't get sad and mad and all that shit about your losing trades, okay? So even though I might be in a trade, like let's say I short here, let's say I take a short here, let's say I take a short trade here and my stop loss is right here and my target is down here, stop loss gets hit. I'm like, it's nothing because my trading plan says it's okay. My trading plan says it's okay. The roll of the dice says that it's okay. We know dice have 6 sides, so let's say I win on 5 of those sides and I lose on 1. So it's okay to take that losing trade. I don't know which trade is going to be a winner and which trade is going to be a loser, but I know my average. Be process oriented and stop focusing on this trade has to be a winner, this trade has to be a loser, this trade has to be a winner, this trade has to be a loser. Process orientated. Look at it as a bunch, okay? Let's say back to the flipping coin. You have 10 flips of the coin, okay? Now it might not be 5 heads and 5 tails. You might get 2 heads, 3 tails, and then you get 2 more heads, and you get 1 tail, and just like that, right? Right now, let's say for all of the ones, we equal $3, and for all of the zeros, we equal -1. Okay, so what did we make? We made $3, we made $3, -1, -1, -1, +3, +3. Sorry, these aren't really writing the best, but you get the point. -1 and +3. Okay, so we got 3, 6, 9, 12, 15, and then we lost 15, 14, 13, 12, 11. So we still made 11 on a 50% average here. Okay, so you just got to be able to handle the comfortability. If you're risking too much and that's scaring you, lower your risk. Forget about the money. Forget about the money because trading is an exponential growth. Because I might be making $1 with a $100 account today, that changes when I have $1 million account and I'm making $10,000 a day, okay? But the risk is still the same, okay? So you really got to work on being comfortable with trading, and listening to this video over and over is going to help with that because you need to build it. But like I said in the beginning of the video, changing your emotions is somewhat similar to having withdrawal effects from addictive drugs. It's going to be hard to be like, you know what? The market took my money on purpose. The market did this. The market isn't taking your money on purpose. The market gives equal opportunity to make money as it does to lose money. Okay? It's up to you to have that winner's mentality. Don't get hung up on your losses. Don't be revenge trading. Okay, so the next aspect I'm going to talk about are streaks. Okay, so whether this winning streaks, losing streaks, this thing that I drew here actually goes and describes it well. Because when you go through and you face these 3 losing trades in a row, what might you say? You might say, this doesn't work. I'm having a losing streak, okay? But you don't got to worry about that. The same thing goes for, let's say you have 1, 1, 1, 1, and another 1, and you have just like this, okay? So while you go through these 5 winning trades, don't get your hopes up. Don't be investing more the next time. You're playing your odds here. You're playing your odds. As simple as that. So the roughest times with trading plans are going to be when the market is changing trends. So when the market is going from an uptrend to a downtrend, downtrend to uptrend to consolidating. And obviously, you know, different time frames are on different trends, but you might have like the daily on a downtrend and the 5-minute on a downtrend as well, while the 15-minute is on an uptrend. So the market gives so many opportunities to make money. You need to have a plan. Now, the losing streaks often occur. I'm just going to go back here so I can draw some more. So when you have, let's say, I'm going to draw this uptrend, right? Followed by a lot of consolidation and then downtrend, okay? Very messed up drawing, but you get the point. Uptrend, down, uptrend, sideways, downtrend. So let's say you've been buying because it's in an uptrend. You've been buying, right? You've been making money. Great for you. Now, now you're gonna go into this ranging trend, which I'm just gonna color it in yellow, and then we have another one down here, which is down. Okay, so this goes into the streaks. So you might be on a winning streak here in the uptrend. Now, as the price goes into consolidating trend, you might be losing a lot of money. But also keep in mind the risk to reward ratio, risking 1 to gain 3, things just like that. Just like that, right? Things to keep the odds in your favor so you can survive during these losing streaks. Also, so you can survive during winning streaks as well, because you don't want to be investing too much because you're on a winning streak. You don't want to be getting ahead of yourself. So I really want you to understand this, that you might be experiencing a lot of winning trades here, and then as the price transitions into this consolidation area, you might be losing a lot of money now because you're getting a lot of uptrend structures and downtrend structures within this, right? Lower low, higher high, lower low, and it's just like that, okay? These are really tough areas because the trend just came from a strong up push where you know buyers are in control, and then wait a second, things are changing, and now things are getting really large candles, small wicks, high wicks, small candles, and just a bunch of stagnation in this area. For who knows, it could be a day, it could be a week, it depends on what time frame you're on. And then all of a sudden this downtrend starts to kick back in. You're like, hey, you know what, maybe the uptrend is coming back in, or it's a reversal, it's a pullback. Just understand that you don't get hung up on these streaks. You're just taking every opportunity that your plan gives you. And just be mindful that changing trends are very difficult times because things are changing. Just like changes in life, all types of change are somewhat painful. So let's say you cut yourself. That painful experience of cutting yourself is due to change. Your skin just went from together to open. That hurt. I remember when I was a little kid and the first experience of me bending my nail back and I was bleeding from my nail, okay? It was painful, but I walked it off in the first 5 minutes, right? I was in excruciating pain. But it wasn't until I looked at my thumb to see the actual damage that I just panicked. I started crying, and I was a little kid. But this just goes to the same thing, because my psychology wasn't in place, my beliefs wasn't in place to be like, you know what? I can see what it looks like, but it is the exact same as it was 5 minutes ago when the problem just happened. Nothing changed but me seeing it and me overreacting to the situation. And that just goes to show the change. The changes are painful experiences. The change of trend is where a lot of traders are going to lose their money, right? Because they expect the old trend to just continue, and they're not expecting it to end. They're adding more money in as the trend keeps continuing. Ideally, you want to buy low and sell high, or sell high and buy low. Why would you be adding more trades in once buyers have been in control for 12 days straight and you're not seeing a buying opportunity? You're only getting in because it keeps going up. That's not good. Have a plan behind what you're doing. Whether the plan is completely stupid, nonsensical, have a plan. Because like Warren Buffett says, an idiot with a plan can beat a genius that doesn't have a plan. Same thing goes for changing your habits. Now, you might have a certain set of habits which are, let's say, bad habits, okay? And you might feel very comfortable where you are now. And let's say you want positive habits. Changing to those positive habits, that first month of trying new things and building that routine will be difficult. Why? Because it's change. Change is very, very difficult. I can't stress that enough. But once you have those positive habits in place, those habits start paying you. Those habits start working for you. And you'd be like, you know what? I don't want to do this today, but I have the habit of making money. So shit, money comes to me anyway. I have the habit of drinking water every morning. So you know what? That pays me in the long run because I don't have to worry so much about how often I'm drinking water because I know I'm getting 2 glasses in the morning a day. Rather than me being that person like, oh, I'm not drinking any water today. It's going to be so hard to get the habit of actually start doing it. But then once I start doing it, what's going to happen? I'm going to like, oh, bro, this is hard. How am I supposed to remember to do this every morning? And then let's say you do it for a week. then it starts getting tired. Why am I even doing this? Your brain is going to start finding so many reasons to latch back to that old belief where you're like, you know what, I wasn't drinking water before and I was fine, so why do I need to do it now? I was fine before, so why do I need to do it now? Is anybody else drinking water? Is anybody else drinking water every day? Is anybody else doing the things that I'm doing? Shit, people are laughing at me because I'm doing this. Should I keep doing this? What has water ever done good for me? Man, why am I even doing this? Your brain is going to find so many excuses on why you should not be doing this, why you need to give up. But it's you who need to have that logical thought and be like, I want these results. I want the results of drinking water. I want to be able to stay hydrated. I want to be able to perform well, so I know I need to be drinking water. And once the habit sets in, you have nothing else to worry about. In fact, that habit is going to start building on itself where you're going to be like, you know what? I'm going to be drinking more and more water because it's a habit. Okay, so the second last part of this, I'm going to wrap this up really quick, is having an edge in the market. What is an edge? An edge is something that gives you a statistical advantage over the market. So this goes back to the whole flipping the coin, the whole casino mindset, and all of that. Understand that you have to have some sort of edge in the market. Now, let's say you have resistance and you have support. Okay, this is not my edge or any edge I've come up with. This is just for examples, right? So an example of an edge would be only selling here and only buying here. This limits you to only taking trades in this area, and you're not taking trades in between. You're not taking any trades in between. Why? Because you just narrowed it down to, I have good selling reasons. I have good reasons to sell here, and I have good reasons to buy here. Okay, and obviously you backtest this to see how it works out. Now, when you're following your plan, you'll never be taking trades in the middle because your plan doesn't go with this. Okay, it's your edge that's gonna make you successful. Now let's just do it like this real quick. Let me add in. Now let's say price goes here, I make some money. It goes here, I make some money. Goes back here, I make some money. Now, let's say this happens. So I think the price is gonna fall. It goes back in here. I lose money. Now I'm looking to buy for a price to go back here to make some more money. But let's say price only goes this much, falls back down, and goes back up, falls back through. I lose that original buy position here, right? But my edge overall in this case would just be buying in this area and selling in this area because it limits me to a few scenarios rather than jumping at every scenario, okay? The same thing goes for those traders who want to apply a bunch of different technical analysis tools, okay? So let's say we got the moving average in there. We got, let's say, a trend line. This is a downward moving average. So let's say we got a trend line in there as well. Let's say we got a Fibonacci. So we got 1. We got, let's say, 6. Let's do just 50, right? And let's do 61. No, let's do 38. Okay, so why does something like this mess up your edge? Because you have too many reasons here. Unless you're going to be the person to be like, okay, I need 2 support and resistances to line up here for me to take a trade, or 3 or 4 support and resistance to line up here for me to take a trade. Sure, you can do that. But don't jump at one scenario, okay? Because you have so many different technical analysis here, you can't be like, okay, I'm going to sell here, and I'm also going to sell here at the 50%, but I'm also going to sell when the moving average is, when it goes below the moving average. You have too many reasons here without a defined edge, okay? Just limit your areas. So maybe, so you have too many areas here. So I touch on this in the Confluence video to stack 2 or more reasons to actually do something. So if I wanted to sell here, let's just say we also have engulfing candle. I do not trade engulfing candles, but you might be familiar with these patterns, okay? If you're not familiar, you don't have to learn them. This is just for example purposes. I explain this in the Confluence to have 2 or more reasons to do something. So if I want to take this trade on this engulfing pattern, I have a few things here. I have the engulfing, which tells me short. I have the rejection of the 50, which tells me short. I have price being below the moving average, which tells me short. I have price rejecting the trend line, which tells me short. 4 reasons to short. rather than we got to break out of the trend line here. I should be going long, but price is above the moving average, so I should be buying this. But the Fibonacci is down. You have too many conflicting areas, and probably you don't really understand why you have these here. Why my strategy is so simple is because I only need basic information here that gives me an edge. And I have the belief because I know my trading plan works. I don't have to prove to anybody else that it works. You can bash me, shame me, all you want. I make money from it, so I don't really care. I make money from it, and I have the understanding of my edge. I place support and resistance. I add some really basic aspects to my Confluence to have a nice trade. It's your trading plan which has an edge over the market, which is going to lead you to your success. So one thing that a lot of traders experience is, let's say we have a trend line, okay? It's a downwards trend line, meaning you're supposed to be trying to short this. We have previous rejections of it, so it's good. You're looking to sell. Nothing wrong with this. Now, for price to break above, and you'd be like, okay, I'm going to buy this. Price breaks back below. You're like, damn, what's going on? I'm so sad. I just lost that trade, but now it was just telling me buy. Now it's telling me sell. What do I do? So you're going to be like, you know what? I'm not going to take this trade. I'm not going to, just because, I don't know. I don't feel like it. I lost the last one. I'm not going to take this one. Okay. Now price goes back above and it's telling you to buy. Now you're even more confused because price was just below the trend line telling you to sell, but previously the price was above the trend line telling you to buy. So what is actually going on here? You don't know. I don't know. Nobody knows. People are saying just go with it. You're in a state of confusion. The way you handle this is by taking every opportunity that shows up. Trade your edge. You never know which trade is going to win. You never know which trade is going to lose. You got to take them all. Okay? You got to take them all. And if you miss it because of some other reason, that's okay. It's better to miss the trade than get in for a reason that you're not really sure about. While you're learning to trade, while you're building the belief system that you need to make this successful, have a sample size of, let's say, 100, okay? So this is why you have to have a plan. Understand how are you going to react to the trend line prior to everything, okay? Is your stop loss going to be 1, right? And your target is going to be 5. You know, have these things predetermined and be like, hey, candlestick above trend line means buy, candlestick below means sell. Take every one of those. Don't be like, hey, this one's like this guy said do this guy said do this. No, you follow your plan. Okay, now for this course, this is my plan. I've back tested it. I use it. You may not be familiar with it. You gotta back test this. And obviously I made a video on how to build your own trading plan so you can work with something that's based on your personality. But always back test the plan. See, okay, this happened on this day, so maybe I should adjust it. I should be having a stop loss of 50 pips instead of a stop loss of 20 pips. Maybe you're like, okay, I should be having a stop loss of 5 pips instead of stop loss of 50 pips. Backtest it so you can see what happens. How does this work, okay? And you might have just made the connection, but the market is random. But you need to have an edge. You need to have something that says, I have the statistics of winning in my favor, even if I'm losing 80% of my trades, even if I'm doing other stuff. You need to just follow your plan. Have an edge in the market, and that goes into building a plan that fits with your personality, and from there backtest it to see how it works out. Should I be using a take profit? Should I be letting my profits run? Should I be adjusting my stop loss once I have a certain amount of profits? Should I be adding more positions in? Understand how this works, okay? And the next thing which so many traders overlook is journaling your trades. Guys, this is the only way you're going to be able to look at yourself and be like, you know what? I got out of that trade because I was scared. I got out of that trade because this and this and this. And don't say you don't have time to journal your trades. You do. Prioritize. Journal your trades if you're struggling that bad, so you can see exactly what you're struggling. Journaling my trades was one of the biggest things that brought me to where I am today, making the profits that I am today. Don't overlook journaling your trades. Every trader is so focused on some form of analysis, whether that's technical or fundamental. but you're not journaling your trade. Like I said, everything has a random outcome, and only journaling your trades is going to show you, okay, yeah, this is true. I want to touch on this because this just popped into my head. What defines a good trade and a bad trade? All bad trades are trades that don't fit into your plan. If you're taking trades that don't fit into your plan, whether it's a winner or a loser, that is a bad trade. I may take a trade that went completely against my trading plan, but it results in a winner, but that is a wrong trade because I did not follow my plan. I may take trades that go with my trading plan, but lose. But this was still a good trade. Why? Because I'm following my plan. I'm working with my edge. So last but not least, I want to talk about the beliefs. I personally like psychology a little, so like this is just fun for me to talk about. But your belief system is everything in your life. Everything. I don't care if it's the religion that you conform to, the type of clothes that you like, the type of men and women that you like, what you believe about the sky, what you believe about after death, what you believe about technology, what you believe about getting older is always worse. These are beliefs, okay? You need to change your belief into a winning attitude. So one of my favorite trading books gives this example, and I really like it, so I'm going to share it with you. Imagine a little child, let's say the age of 4 or 5. He's never met a dog before, but this is his first time meeting a dog. Now, the dog, let's say, bites him really, 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 really bad. He gets sent to the hospital, and this is just a negative experience for that child. So what will happen? Now, in the future, this kid is going to grow up hating dogs. Why? Because his first experience with dogs was really bad. His mentality is going to say, all dogs are bad. But as we grow older, we know this is not necessarily true. He just doesn't have a large enough sample size with dogs. Now, let's say the kid, he has that mentality, all dogs are bad. Now, let's say 2 years later, he's at the age of 6 or 7. Now, he's at a park. He sees many other dogs. He gets scared. I don't want to go to the park. There's dogs. I don't want to go to the park. Those dogs are going to bite me. Dogs bite everyone. That's what they do. To his knowledge, that's what dogs do. They bite everyone. Because that was his first experience, getting bitten. So once he gets a little more confidence, maybe he's like, you know what? I'm just going to go to the park. I want to play anyways. I'm going to go to the park. Forget the dog. I want to give the other perspective where the kid may not want to go to the park, but the parents are like, you're going to the park. If you like it or not, you're going to the park. And that kid will be completely terrified. He may just sit on the play place crying, not playing, not doing anything, just crying because he's just shooken in fear. Now here's the problem that kid is going to face. When he looks around and he sees the other kids having fun and playing with those same dogs, he's going to be in a state of confusion. Absolutely confused. What's going on here? Dogs bite everyone. Why are dogs not biting them? Dogs bite everyone. Why are they laughing? Why are they having fun? Why are dogs not biting them? That is a key moment in that kid's life where he will then start to reevaluate everything he knew once before about dogs. He will then come to the conclusion that, wait, maybe all dogs are not bad, but that dog was bad, okay? But here's an issue that comes along with that. He might say, if that dog treated me bad, any dog can treat me bad. Now, while this is not ultimately wrong, this is a limiting belief because this is going to stop that kid from interacting with other dogs and missing out on the joy of playing with those dogs or whatever the benefits of playing with dogs might be. So once this kid starts reevaluating how he perceives dogs, he might walk up to a dog and start petting it and be like, whoa, this dog isn't biting me. You know what? That's crazy. Now, let's say he starts going to the park every day to play with these dogs and no dog is biting him. He's like, wait, what's going on? Why did the first dog bite me and these dogs are not biting me? It just goes to show that every experience we have now, we're going to link it to the past experience. Any experience that was somewhat similar, we're going to try to relate it to that one, which is why I say the market is unique. We are not relating our last trade results to the trading opportunity now. Never. Okay, now this just goes to say you need to have a large enough sample size. You need to gain some experience with these fears. Maybe you're not actually afraid of the dark, you just don't have enough experience with it to be like, you know what? Everything in this room is still the exact same place, it's just dark. Darkness is nothing but an absence of light. So what do you need to do to be able to have a perception in the dark? You don't necessarily need light, but you need to have an awareness, okay? If you know anything about symbolism, light is often referred to as awareness as well. So for me to be able to turn off the light and maneuver through the darkness is because I can either feel my way around, or my muscle memory is so good that I can walk through the darkness and not run into anything. You might be able to use your nose to be able to maneuver through these situations as well. Your hearing might be so good, but nonetheless, you need to have a sample size. I'm gonna give you a little test. So when you go through and you watch all the other videos, let's say you have an $100 account. Split that $100 into 20 situations that you would lose, okay? So risk 1 to gain 3, whatever the case may be, but you're gonna span that $100 to take 20 losses, or more if you want, but give your room to take at least 20 losses. Take every trade that pops up, whether you like it or not, take every trade. Then see the results. See that, oh wait, I took 3 losses in a row, but because I took 3 more consecutive wins and they more than balanced out the losses, okay? So you need a large enough sample size. Don't be hanging in the fear because you have a negative experience. You gotta understand how things work. Okay, now the last aspect to this, I wanna say, you are the holy grail to your trading. You gotta be a comfortable person with accepting that risk. And just because you put your stop loss in at 20 pips, you're like, you think you've accepted the risk? That doesn't, just because you know that you might lose 20 pips on this, doesn't mean you've accepted the risk. Knowing something and acting on it is 2 completely different things, okay? There are so many analysts and very few traders. Remember that. If you put a stop loss in for 20 pips, you must be comfortable with losing that amount. Not once that stop loss gets hit, you're like, oh damn, this never works, or my stop losses keep getting hit. You need to be comfortable with that. You're like, okay, that happened, all right, on to the next move, on to the next move, on to the next move. You get so many traders that get hung up on the last loss that they miss the next opportunity, okay? Literally, if you're risking too much and you're very uncomfortable with that, if you're uncomfortable with the fear of the unknown, you need to realize that the market has a random outcome and it's your trading edge that's going to make you make money in this, okay? All of this stems on you. If you don't have the right belief and you don't understand that the market has those random outcomes, the market operates like a casino. I want you to be the casino. Don't be the player, but be the casino here, okay? Put the odds of success in your favor. Without the belief in place, the risk management will not work because you will want to invest more and more and more. This is not enough money. You want to make more money than what your account is allowing you to do. And then you'll just blow your account. You need to have that mental aspect in place. That, like I mentioned previously, that stems from everything else. Traders will see what they want to see. So a few years ago when I was trading and I was just not at the place that I'm now, if I'm looking for a trade, I'm like, let's say, oh man, everybody on Instagram right now is buying this, so let me hop on and see if I see opportunity. I might go through all the time frames searching for an opportunity. And the brain naturally tries to make things familiar. The brain naturally tries to find patterns in things. People will look at outlet. If you know what an outlet socket is, where you plug your phone into, you plug your computer, you plug your fridge and stuff into an outlet. People say the outlet looks like a smiley face. Now I understand if you're in some different parts of the world, it will not look like that. But here in North America, they look like that. But is it a smiley face? Did they make it out to a smiley face? No, it didn't. But the brain is going to try to find a pattern. The brain just naturally tries to find patterns in things. So don't fall to that trap. Don't fall to that trap of trading. Each moment is unique. That's all I gotta say, guys. Work with this information. Please, please, please get the mentality in place. Without the mentality in place, you just really won't succeed. And I want people to succeed. I want to be surrounded by people who are succeeding. I want to see people in their positive, abundant state. So have a positive mental attitude. You might think books do nothing. Read those self-help books which help on your mindset. You cannot have a loser's mentality and succeed. How could you have a loser's mentality and succeed? Losers beget losers. Winners bring winners. It's just as simple as that. And with that, guys, I'm out. I'll see you in the next video.